Hey, what's up everyone? Hope you're all doing good. So this is Trading Coach this side, and in today's video we are going to talk about the Wyckoff trading method, and we are going to discuss about something called as the accumulation phase. So accumulation phase is a setup where the big players or the big institutions, or whatever you call them, big players, big institutions, big money traders, they are likely to buy the stock or asset. All right. So it's a very interesting concept, and this is where most of the big players are likely to take positions before uninformed traders, before retail traders, or before the general public even before they become aware of the stock. All right, even before these uninformed traders and retail traders become aware of the stock, these big players are likely to buy before them. And accumulation phase will help us to identify the activity of big players right on the price chart. So that's what the Wyckoff has actually said. And if you really look at this accumulation phase, you can understand that this is an excellent setup to capture the beginning of a trend. So if you want to make some decent profits by riding an entire uptrend, you need to look for the accumulation phase. This setup will really help us to do that. So we are going to discuss all of this in this particular video. So I recommend you to stick to the video till the end. And in case if you are new to my channel, I recommend you to hit on the subscribe button, and also I recommend you to tap on the notification icon. In case if you like to know more about me, more about my trading style, more about what I do here, visit my website, that is www.tradingcoach.co.in. Okay. So being said that, let us look at some of the charts. All right, let's get into the topic. All right, so right now I'm looking at Cupid Limited 5-hour time frame. So if you look at this particular chart, you can see that we have a nice upside trend, right? So all the way from this point, that is all the way from 200 to all the way till 325, we can see a nice rally, nice uptrend in the stock prices. So if you ask me how much percentage we might have gained in this particular uptrend, it's almost close to 61% returns, right? On a single trade, we have gained somewhere around 61.53% returns. And if you are wondering how to capture these type of trends, this is where the accumulation stage of Wyckoff really helps us. All right. If you learn the concept of Wyckoff's accumulation, you can capture these type of trends, because as I'm going to explain right now, what preceded this kind of trend is the accumulation phase. So what happened before this was the Wyckoff's accumulation phase. So let me do my Wyckoffan analysis over here. All right. So first of all, if you look at this particular chart, on the I guess on the left edge of the chart, you can see that we have a nice downtrend, right? So exactly from here, from this particular point to all the way till here, we have a nice sell-off in the stock prices, right? The stock prices depreciated all the way from here to here. It's a kind of a downtrend and a markdown phase. Okay, so Richard Wyckoff usually called downtrend as markup phase. He called downtrend as a markdown phase, and most of the time accumulation phase usually takes place after a downtrend. All right, so if you want to identify an accumulation phase, you need to make sure there is a nice downtrend or there is a nice markdown phase at first. All right, so that's the first point. That is a first precursor, or that's the first factor you need to look for, because accumulation phase always, most of the time, takes place after the downtrend or markdown phase. All right. And the second most important precursor, as we can see on the chart, is that we will have a nice support zone on the prices. All right. So if you look at the price action over here, you can see that we have a nice support zone, and you can notice that the buying pressure is holding very well at this particular support zone, right? So this indicates a nice buying pressure, and the level is holding very well at this particular point, right? So this is the second most important precursor of an accumulation phase. So after a markdown phase, you should see a nice support zone which should be holding the prices, all right, which should be holding the buying pressure, which should indicate a nice buying pressure. This particularly means the buyers are not letting the prices go below this specific zone, all right. They're not letting the prices go below this support zone. You can clearly see the price action. Every time the prices came to this point, you can see the market quickly bounced up, right? That indicates a serious buying pressure, all right. And here is the third and one of my favorite step or my favorite phase in this particular accumulation phase. So in this particular stage, what happens is you'll see a kind of a spring or a false move, all right. So it's a kind of a interesting thing. Wyckoff usually called this as a spring because, just like a spring, right? If you have seen the spring, you know that, when you press the spring, the spring usually bounces back. So like this, here what happened is, the prices just went below the support zone. It broke the support zone, but quickly it has bounced up, right? So you can see a nice false move below the support. And this particular false move has also trapped traders, all right? So if you really look at this, all the traders who thought, okay, the prices are going to break the support zone, all those traders who have taken short position, right, they are completely trapped in the market, all right. And right after trapping those uninformed traders, you can see what happened in this accumulation phase, okay. So all the big guys have taken position within this, and all the uninformed traders are trapped. And now next what happened is we can see a nice upside movement in the stock prices, right? And as you can see, there is a nice markup phase, nice uptrend, and of course it went all the way up to 60%. So whether you believe it or not, I did took some position on this specific stock, but I didn't enter exactly on the uptrend. As Wyckoff has pointed out, if you want to take entry in this particular accumulation phase, you should take your entry right after this third stage, all right. When you see a spring, right, when you see a kind of a spring over here, when you see that, the spring is trapping other traders, and when the spring bounces back to the upside, that's where you're supposed to take your entry, all right. Your entry should be somewhere over here, and your stop loss must be somewhere below the spring. So you can capture this entire upside movement. Not only that, and whenever, the prices breaks through this particular zone over here, whenever the market breaks above this specific resistance, Wyckoff recommends us to add few more positions, all right. So Richard Wyckoff is a genius trader. He has given us almost all the insight, all right, starting from identifying the setups and patterns to all the way till, managing your positions and risk. So what Wyckoff usually tells us is that once you see this kind of a spring, right, in the third stage, you should try to take some positions, but he recommends us to take very small quantity of positions here. Right after that, when the prices breaks through this specific resistance zone, he recommends us to add a few more contracts. He recommends us to add a few more quantity of stock in this particular case, so that we can capture a nice upside of the markup phase, all right. So this is how the accumulation phase usually works out. So first you will see a downtrend or a markdown phase, then you will see a nice support zone holding the prices, then you will see a kind of a spring or a false movement, and right after that you will see a nice breakout, and followed by the breakout you will see a nice markup phase, okay. So this is how the setup usually works. And of course some people try to use the volume along with the accumulation phase, but just like I have pointed out in one of my earlier videos, volumes nowadays are not much reliable as they used to be. And most of the time the volumes are manipulated to a large extent by these algorithms and by these machine traders. And also if you're trading in something like cryptocurrencies, or if you're trading in something like forex or commodities, or even if you're trading in options, indexes, you cannot use the volume, all right. You just have to rely on the price itself, all right. And that's the reason why I am not using the volume right now on this particular video, on this particular example. Maybe in future videos I will try to use the volume along with the Wyckoff market phases, all right. So let us quickly look at another example over here, and this time I'm just bringing up a commodity. All right. So Wyckoff market cycle is not just limited to one specific asset. You can apply it on any different assets, whether you're trading in commodities, currencies, stocks, or whatever you point out. So in this particular case, I'm looking at gold mini futures of MCX market, and if you look at the price action over here, we have a similar price action, right? So take a look at this. So again, a similar setup, but this time I am looking at a little lower time frame. So in the earlier case, I was looking at a different time frame, that is 5-hour chart. But this time I'm looking at 1-hour chart, and sometimes this particular market phase, this accumulation phase, is visible even on something like a 1-hour chart. So here you can notice a nice downtrend or a markup phase. Again, we had a nice support zone where we can see a nice buying pressure, right? So every time the prices came to the support zone, the market just bounced up, the gold prices just shot up, indicating there is a good buying pressure. And you can see in the third stage, there is a nice false move, right? There is a nice spring or a false move where there is a nice breakout and all the sellers got trapped, uninformed sellers. People who are pretty new to the markets, who don't understand how the prices work, they got trapped by the price action. And so later you can see what happened. The prices just shot up like anything. The market went up to 15% to the upside, and we had a nice markup phase, right? Again, if you have seen this particular setup, you could have traded right after the spring. So when you see the spring coming back into the range, right? So that's where you could have taken your entry. You could have kept your stop loss somewhere below the spring, and you could have captured a nice movement to the upside. All right. And of course, this is a futures contract. Even though the gold prices went only by 15%, the futures contract might have given you some handsome profits. All right. So being said that, I don't want to give you only the positive image of this particular accumulation phase. Sometimes what happens is, the prices will go right below the support zone. It will just break through the support zone, and even it may continue to go further to the downside. So sometimes the setup may not hold very well, but given on a probability basis, it's really a good setup to capture some decent upside movement. All right, the setup has nice risk reward. It also helps you to capture a decent upside movement. It also has a nice probability. So based on all these different factors, I would say it's really worth to try this particular setup. You can add this setup in your trading toolbox. Okay, so last and final point, even though the setup has a good probability, make sure you trade them with a proper risk management. All right. So not just this setup, any particular price action setup, any particular trading strategy, make sure you follow a proper risk management. All right. All right. So just to recap a little bit, we spoke about Wyckoff trading method. We understood about the accumulation phase, and we saw where big players are likely to buy the stock or asset, and we also understood why accumulation phase is an excellent setup to capture the beginning of an uptrend. So right now, at the end of this video, how to spot the accumulation phase, right? So if you have any questions or any doubts, I recommend you to leave your questions, leave your doubts, leave your queries on the comment box below. I will try to answer them. And if you like this video, as a humble request, please click on the like button and also share it with your friends if you feel it's beneficial. Last but not least, thanks a lot for watching and happy trading.